Alright, so welcome everyone. In this class we will be looking at financial accounting. So and our topic will be single entry and incomplete record. That's what we'll be treating in this class. Alright, so firstly let's talk about what single entry is all about. Single entry is just an environment or a system of accounting that does not recognize the double entry principles. It does not take the double entry principle into recognition. I just want to know about single entry principle. The flexibility of double entry principle is highly likely in such systems. Practically means transactions are not being recorded twice. That again means there is no debit and credit, so there is no full captures of transactions. Transactions are only recorded once, and in that system, the issues of two-fold different transactions is highly lacking. It's highly lacking in the system. So in double entry single entry system, there is nothing like full record of full details of the business transactions. So in that regard, the double entry principles is highly likely in the system. So therefore, we should expect that the record that will be available is going to be an incomplete one, an incomplete record in the system. So that brings the issues of incomplete record. So in a double entry principle, in a single entry system rather, whereby the records are few, or the record available are few, they are not complete one. So we should know that we can't have a complete record in the system. So therefore, the records that are available are details that relate to the personal accounts, that is the account of debtors and creditors, and the real accounts, that are your asset accounts, so that the accounts or details that are easily available in the systems. Any item that relates to nominal account, like income and expenditures of the business, are difficult to obtain in such an environment. So in a single environment, nominal accounts are usually not available. So that makes it difficult to not to be able to prepare the income statement and determine the financial position, the financial results of the organization, that is the profit or loss of the organization. It will be so difficult to actually determine the financial performance of the organization as a result of we having difficulties in having details that relate to the nominal account of the establishment. So how do we then solve the problem? Since the available records are incomplete, the records that relate to or details that relate to personal accounts are only what we have available, and we have items that relate to income and expenditures, which enable us to determine the financial performance or financial result of the organization or prepare the income statement. Since these results are not available, so we usually determine the net income of the business by just comparing the opening capital of the business to the closing capital. So the net income of profit is determined by trying to measure the business at the beginning when it is the beginning of the period, the stand at the end of the period. So if the net income is that the closing capital is more than the opening capital, that means what will make this capital in the period is as a result of loss. So that is the net profit once closing capital, once the closing capital is higher, once it is higher, so it's an indication that the establishment has actually made a profit. And if otherwise, if this opening capital is higher, if it is higher, the opening capital is higher, so it is otherwise. So it means the business has make a loss in the period. So if opening capital is higher, it's an issue for the establishment. So it's actually indicating loss for the establishment. So profits equal that what closing capital should be higher. So alright, so we can move to other aspects. So as I've said now, net profit is always closing capital and opening capital with separations. Alright, so what is the opening capital? To get opening capital, you compare the assets minus liability. So the no capital is asset minus liability. So opening asset minus closing asset of the minus closing liability of your business minus opening capital. And closing capital is always closing asset minus closing liabilities as well. So sometimes there might be issues of drawings and additional capital. So during the period, the owner of the property might have withdrawn some goods or some property of the business, and that added some using capital in the period, an additional capital used by the owner. That as well includes capital. So we add loans to the closing capital and the debt capital, the additional capital from the closing capital to get our net profit. So now net profit will become closing capital plus drawings minus opening capital minus additional capital. So this formula will change from days now. So with the addition of opening drawings and additional capital, this will become, it automatically become this. Do not forget we have this now in place that we are going to be applying. Alright, so we'll be applying this now. This, I think that is that is direct for you. So this is what we'll be applying now. So we see we'll be applying this now. Alright, so let's move to the next aspect. So let's take some examples. Practical examples are saying we can easily do a single entry or a single entry environment. So let's move on.
Alright everyone, let's take these illustrations on single entry and incomplete records. Alright, so you can easily pause the video and go through the questions. Mr. X, the proprietor of a small grocery shop, has requested you to prepare his account. He did not keep proper books of accounts. From his passbook, notebook, bank statement, ROI information, at formal discussion, you obtain the following figures for the year ended 31st December 1997. Alright, so we have the following details: assets and liabilities, as at the beginning and as at the ending. And during the year, Mr. X used part of this stock for domestic affairs, which was agreed at 1,200 naira. He drew cash for private expenses at frequent intervals. He estimated his drawing in cash at 1,380 naira for the year. On 15th February 1997, he had introduced additional capital of this amount, and he had agreed to the following suggestion: to write off as bad debt a sum of 300 naira by a customer who died in this day, that's May of this year, and to allow 15% per annum depreciation on fixtures and fitting, and 20% per annum on delivery van. Alright, so let's first in solving, I will ask to ascertain the profit or loss of Mr. X for the year ended 31st December at this date, and prepare the balance sheet of the grocery shop at December. Alright, so what you need to do first for you to find a way of preparing the workings, adjust your do the necessary workings in calculating your furniture and fitting, depreciation of furniture and fitting, then delivery van, then bad debt. So let's do that first. That should be the first thing we should try doing now. So let's carry that out. Alright, so let's depreciation of furniture and fittings. So we have what is the value of that? As that furniture and fittings is 2,000, and the rate is 15%. So we can have 2,000 times 15%. We have the percent here. Oh my god, no mind me. 2,000 times 15%. So we have it's 300. So NBV, the NBV, net book value of furniture and fittings, and there will be 2000 minus 300, so we have 1700. Alright, so depreciation of delivery van is the delivery van will be, what is the value of delivery van? Delivery van, its value is 3600. So 3600 times 20%, so that is 720. So MBV will be 3600 minus 720. So we have that is the MBV. So let's do that of what is it called? So these are our workings here. So this is what we are asked to prepare. Income statement, these two. Alright, so we have bad debts. Okay, debtors, net debtors during the period, because we are asked to write off bad debt. So what is the next debtor? The debtor here is the bad debt should be 300, and the debtor at the end of the period, the debtor at the end is 98. So net debtor will be 9800 minus 300, so that is 95. So we have drawings. So what is the amount of the drawings? He has drawing at these dates. Okay, you use for the stock of drawing of goods is 12, drawing of cash is 1380. So we can have drawing 1200 plus 1380, that amount to 2580. So additional capital introduced. What amount of capital does he introduce? He does introduce 2980. Alright, so $980. Alright, so let's we can now prepare our statement of affairs now. Let's quickly prepare our statement of affairs. Open the statement of affairs. So the assets. So the first asset we have furniture and fittings. So we have delivery van. We have stock. We have that is inventory. We have trade receivable as our trade debtors. Alright, so what other using do we have? Oh my god. So we have trade debtors, okay, trade debtors, stock, bill receivable, and then cash in hand. So bill receivable and then cash in hand. Alright, so let me have that here. Alright, so furniture and fittings. Furniture and fittings is 2000, yeah. Furniture and fitting here is 2000, and depreciation at the end of it is no longer 2000 because we have depreciated it. So what is the net book value? The NBV is 17, so 17 here as closing statement of affairs, so it should be 17 now as a result of depreciation. Alright, so delivery vans, that is delivery van was 3,600 earlier, 3,600 at the beginning, and now it has depreciated and it has become 2,880. So here we have stock value of stock value 20,400 into 400, 20,400 at the beginning, 22,400 at the closing. Alright, trade debtors is 12,400 at the beginning, and now it's 95 because of the bad debts. Alright, so we have bill receivable 3132, bill receivable 31, and here is 3,200. Now cash in hand is 400, 819, 400, 819. So the total asset now is this amount. It has been automatically calculated. So this plus everything has been summed. So there the total asset. So the total asset here is this. So this is the total asset. Now let's move on to liabilities. So what are our liabilities? As trade creditor, bill payable, we have bill payable, so we have bank overdrafts, okay, simply copy that. So we have that copy. So what is the amount of trade creditor? Trade creditor is 9,120.84. 9,120 and 8,400. Alright, so bill payable. Oh my god. Bill payable 2,210, 2,200. 2,210, 2,200, 2,210. I think this is 2,200. Okay, let me check. Bill payable 2,210. Okay, and then 2,200. Bank overdrafts 18,000, 14,000, 14,000. So alright, we have our opening capital to reduce our money. So we know that our capital is always total asset as our earlier formula minus total liability. So this is our total asset here. Sum of this is our total liability. Sum of this. So the difference gives us the opening capital. So the same applies with this. Sum of this gives us our total asset. Sum of all the liabilities give us this. So the difference will give us our closing capital. Now we can determine our profit. So we know. So this is the statement of profit here. We have to prepare. So to prepare that, we know that will be the closing capital. Applying the formula. Closing capital. And that is 15,970. So we have was drawing during the period. So what is this total drawing? And that is 2,580. So that has been summed. So we have the sum already. So and also we have to deduct our additional capital what is our addition? Okay, coming additional capital. So what is our additional capital? Additional capital is, okay, let me say opening capital. The opening capital is 12,570. 12,570C, and then additional capital. So what is additional capital? 2980. Alright, so opening capital is that. Okay, closing capital is 15,970. Alright, so that has been corrected. So we have net profit to be this amount. So now we can prepare our statement of financial position. So this is the profit of the of the business. It's at the period. So we can easily prepare our statement of financial position. So you start with the assets, furniture and fittings, and the furniture and fittings here we have its value is 1,700. Its net book value. Just put the net book value there. Now delivery vans, we have what is our delivery van? The net book value 2,880. So that is our, so these are our total non-current assets. Now current assets, we have stock. The stock value is simply the closing value of stock is 22,400. Alright, so we have trade debtor. The closing balance is absolutely 95. So we have bill receivable, whose value is 3,200. We as well have cash in hand, whose value is 800. So alright, so we have total current asset is this, and this is our total non-current asset. This is total current asset, and this is our total asset. Alright, let's move to capital and liabilities. So capital, the opening capital of the business. So what is the capital of the business? So capital of the business, the opening capital is 12,570. That is capital at the beginning. So it does have additional capital in the period. There's some additional capital to it. So the additional capital is 2,980. So we have drawings. So we have to deduct drawings from it. So let's drawings. Drawings. So what is our drawings in the period? The drawing is 2,580. 2,580. Drawing for the period, and that will be this minus this. So that will simply give us okay. We have profit of the business, profit made by the business. The profit is 3,000 naira. So, and this is drawing. Drawing should be minus drawing 580. We have 580. So, and here we can have this so we have that as our closing capital. Now let's talk about liability. So what are the various liability we have? We have trades. We have the trades creditors. So what is the amount of trade creditors? The closing amount of trade creditors is what? 8422 14,000. 8422 and 14,000. Alright, so this is bill payable and overdrafts. So bill payable and the bank overdraft. Alright, so we have okay, 84,200 14,000 and 40,200 14,000. Okay. Just stock is 495 32, and then we have cash here. Okay, the cash hand is 890. Sorry, so that is the error we have. So alright everyone, we can move to the second example. So we have these enterprises did not maintain complete record of accounts, but has prepared the following details in respect of transactions which took place during the year ended 31st May 2012. So we have summary of bank transaction for the year. These are the summary. The receipt is this. These are the payment here. So the bank balance at the beginning of the year was this. So apart from the opening transactions that were carried out through the bank, opening cash transactions also took place. So these are the transactions that are displayed in the period. Details of assets and liabilities of goods enterprises are as follows. So we have inventories as it is, and we have other assets and liabilities. You are required to prepare the income statement for the year and statement of financial position for the year. So what we just need to do now is to prepare the required this thing account, which is requires account that income statement. So we have our income statement here and statement of financial position, which is our balance sheet. Alright, so but before we move on to that, we need to, it's necessary that we focus on the additional informations. So we need to do some workings, background workings. So it's better you just leave a space, a line for the income statement, a line for the statement of financial position, and then add on to your ledger accounts for workings. So the first thing we need to do is for us to try to prepare our opening statement of affairs, so we can get our opening capital as part of the workings. So we need to get the assets. So the assets, what are the assets we have? So we have motor vehicle at the beginning, the asset at the beginning. We have motor vehicles and furniture and fittings. These are the two assets we have at the beginning. So we have motor vehicle, then we have furniture and fittings. Okay, so what is the amount? Let's quickly look at the amount. Motor vehicle is 500,000, furniture and fittings is 162,500. Alright, so we have 500,000. Yeah, 500,000. 162, 500. 500. So what are the other assets we have? So we have the other assets we have there is no fixed asset at the beginning. So we have trade receivable, inventory and trade receivable. Inventory, we have inventory, the inventory is of two types. We have goods and consumable. This should be our inventory. Alright, so we have trade receivable. Alright, so we also have insurance prepaid. Alright, so the inventory is 337,500, 37,500. Alright, so we have 337,500. We have 37,500. Alright, that's good. So we have trade receivable. So what is our trade receivable? Our trade receivable is absolutely, so trade receivable is 300,000. Insurance prepaid is not known, so we don't have insurance prepaid at the beginning. So the trade receivable is our trade receivable is 300,000. So insurance prepaid is 0. So let's say bank. I think we are giving the opening balance of bank. Then let's go back to that. Okay, so bank, insurance prepaid is not known, so let's check bank. Alright, bank. Okay, these are during the year, but this is at the beginning. Bank was 39,250 at the beginning, so bank balance 39,250. Alright, so liabilities, so certain we are going to have trade payable. So trade payable is 425,500. We also have rent accrued. I think that is all as far as liability is concerned. That is all. Rent accrued 28,750. 425,000. 28,750. Alright. So we have rent accrued. We have 425,000. We have 28,750. Alright, so our opening capital is absolutely calculated as this. It has been calculated. So this is our opening capital. So 932,000 is our opening capital. So I think everyone understands that. It's as simple as that, can you see? So capital is all of the assets minus the liabilities. So all of the assets at the beginning of the period are this, and these are the liabilities at the beginning of the period. That gives us the opening capital. Alright, so now before we prepare our income statement, we need to make some adjustment to some accounts. Like for instance, we're giving the bank accounts here. So we have the bank account here, so it's better we prepare our bank accounts just like this. So we need to prepare the bank account and then know the balance at the end of the period. So we also prepare the cash account and know the cash balance at the end of the period. So let's quickly do that. So bank accounts, so we can have balance go forward, balance forward or brought down. So I think we have debtor as the receipt in the period. We have debtors. Alright, so balance brought down is 39 to 50. 39 to 50. 39 250. 39 250 is our balance brought down. And here we have 337,500. So that is our debtors. So let's look at the order of the payments. So the payment during the period, I think to make our work faster, this is just divide this into 2, divide my screen into 2 to make our work easier for us. Let me divide my screen into 2. So let me divide my screen into 2 to make the work faster for us. So alright, so our debtors is this. So we have creditor now as the payments. So creditor is I hope you can see it. The creditor is 1125,000. So other payments, we have rent. So rent is 142,500. So we have equipment as equipment bought during the period as a non-current assets. We have that is 375. Absolutely 375,000. So we have insurance during the period. Insurance paid for during the period. So that is 87,500. So we have general expenses. So let me complete that. I'm sorry. General expenses. General expenses, that is 350,000, as you can see. So we have drawings. So the drawing is 37,000. Yeah. So we have drawings 37,000. So we have wages and salary, wages and salaries. So and that is 150,000. Oh my god, 150,000. Balance carried on, balance CD. So these are balance CD. I think this is absolutely Excel. It has been programmed, so you know how to balance your account already. So you had this together and then sum this to this place, find the difference, and you have a balance carried on. I think I don't need to explain that. It's very easy to buy balance on account. So have the total of the debit side, the total of the credit side. So whichever is greater, find the difference and put it at the lesser side. So once you put that at the lesser side, so both sides of the account we have an equal side that you can have a balance brought down. So this is the balance, losing balance of what? Of the bank during the period. So let's move to cash accounts during the period. So cash, it doesn't have an opening balance, but sales is the receipts. So we had sales, that is 1,037,500. So that is the receipt. So we have purchase. This is the payments, credit cash and credit purchase. So that is 290,000. That's 290,000. So we have drawings in the period. The drawings, we have drawings. So the drawing is 17,500. So we have wages. That is 26,250. As well we have consumables. consumables, and that is 350,000. So we have balance CD. Excel has done that for me already. So that is our balance carried on and balance drawdown. Balance drawdown here. Balance drawdown. Alright, so balance drawdown here as well. Alright, so I think you know how to calculate that. You know, so add this the debit side is greater as well in cash account, so you add all of this together and find the difference. That will give you a balance carried and it will be totaled. So I think that is very easy. So let's prepare receivable account. Yeah, wow, that is very interesting. We should know how to do that. So we have this opening balance of the receivable during the period, this is the closing balance, and we receive an amount of cash from the receivable during the period. We received this amount, 3,375,000 from the receivable into the bank account. I think you can see that. So we have that here. It's already been debited to the bank account. So let's prepare the receivable account. Receivable account, normally we have a debit balance. So balance brought down or brought forward, either of the two. So we have so what is the balance of the receivable at the beginning? Trade receivable with balance is 300,000. So that is 300,000. I haven't 300,000, and then we receive. So we have to credit that. We can call that cash received. Cash received. That is to bank. We received that through bank. Alright, so how much was received in the period? Let's quickly check that. Oh my god, don't mind me. So the amount that was received during the period is absolutely 3. It is 3,375,000. That is the amount we received from the debtors, from the receivable during the period. Alright, so why is the closing balance? So at the end of the period, by next year, at the end of the period, they have an amount, an ending amount of 400,000. So of 462,500. That is indicating that by next accounting year or by next year, they have a beginning balance. So we can have a balance brought down from them by next year. This is showing an accounting period, a new accounting period. So they will have a beginning balance of 462, which is the beginning balance for this period, 462,500, and therefore for us to have so we have that. So for us to have that here, so that simply means we surely have a balance carried down here. Balance carried down will be here. Balance carried down will be here. So and that is 462,500 for our balance carried down. So yeah, so you will sum this together. So the amount we receive from them, amount they are owing us at the end of the period, sum it together and subtract the amount at the beginning. So that will give us the amount of goods sold to them or credit during the period. So that will give us the sales, credit sales during the period. Alright, so we derive our credit sales. Now the same applies to trade payable also. The trade payables too, we have transaction from them. This is the amount of the suppliers, the amount we are owing the suppliers at the end of the period, at the beginning of the period, and the amount we are owing them at the end of the period. So therefore, to easily solve the problem, we go to this way by just balance brought down. Then we have a credit balance at the beginning. So balance brought down, what is the amount we are owing them at the beginning? 425,000. Owing them 45,000. Alright, so the way we receive money from them, yeah, we does receive money, creditors, payments, they make payment to us. So payment received, payments to receive to bank. I think it was being received through bank. So payment received through bank was 1125,000. Alright, so we have that, and the closing balance in the period. This is closing balance in the period. We have this as closing balance, and then by next period it's going to have a balance brought down here. I think you agree with me. You have a balance brought down here, and that is 400,000 naira, and it's going to have a balance carried down here. Balance CD, and that is 400,000 there. Alright, so what we have here is our purchase, amount of goods we have bought on credit from them. Isaiah has done that for me already. Credit purchase. So how does the guy calculate this? It sums this together. That is the amount we payment received from them and the amounts we are owing them at the end of the period. Is there sum that and subtract the amounts we owe them at the beginning to get the amount of goods we have bought from them on credit during the period. Alright, so that's payable. We have our purchase already. Now in our inventory, the consumable parts, the issues we have here is that under the consumable in inventory, we have opening consumable of this. These are items we have to use during the period, we have to consume during the production period and during the for the use of the business or organization. So this is the opening consumable here, and this is the closing consumables. And then some consumables were purchased during the period. Some consumables were purchased. Look at this information. Some consumables were purchased here, which is 350,000. So the solution here is that we need to open an account for consumable and get the actual amount of material or item that has been used up or that has been consumed. Alright, so which means we are going to charge to our income statement. Okay, so what we just need to do now is, okay, what is the open balance of the consumables and assets? So we have balance brought down here. Balance brought down. So what is the opening balance? It's 37,500. As you can see on the screen yourself, 37,500. So we actually made a purchase. Yeah, we purchased. We can write cash. That is the corresponding account. Purchase cash. So purchase consumables. So we purchase consumable during the period. What is the amount of consumable purchase? 350,000. So 350,000. Yeah. Alright. So and then this total amount of consumable material consumed during the period, and also at the end of the period we have a closing balance. Yeah. And then what is our closing balance at the end of the period? Okay, so this is the closing consumable. Alright, so we have consumable incoming. This is the closing balance of consumable, 17,500. So we can have balance brought down. So at the beginning of next year it's going to have a balance brought down. The balance brought down will be that. So alright, so it's 17,500. So we can have our balance carried down here now. I think you are with me. Balance CD. Alright, so and that will give us 17,500. So Isaiah has calculated the amount of material that is being consumed by the organization. So and that will be charged to the income statement. So income statements. In the period we have the income statement. Alright, so that has gone. Rent account also we have information. Rent accrued. This is the amount of rent owned by the company during the period by Grace Enterprises at the beginning. This is the amount owned at the end. And this is the amount paid for. This is the amount of rent paid for by the company. The company pays the amount during the period. Alright, so all we just need to do now is open an account for rent to know the amount of rent or the amount that will be charged as rent to the income statement. Alright, so it's a liability. So since it's an accrued amount, it's still owing. So you don't have a credit balance. Balance brought down. So you take it to the credit side, not debit side, since it's a liability. So we have accrued amount, that is the opening balance 28,750. So it's very important you are able to prepare this, and this is where the work is. So also we have amount. What was our amount that we paid? The company paid 142,500 as rent during the period. So you just credit your bank, which you have done already, and debit your rent account. So you can go to and write cash and then put the amount here, which is 142,500. Alright, so we can have alright, so we have an amount of rent at the ending of the period. Alright, so this is the amount of rent at the end of the period. So at the end of the period, we're going to have balance drawdown here, balance incoming, balance draws down. So what is the balance drawdown of that rent? 30,000. So we have our balance carried down. Balance carried down, which is 30,000, which is 30,000 naira. So as well as calculated that for us, we have the amount that will be charged to the income statement. I have an amount that will be charged to the income statement. So this will be charged to the income statement as rent during a period. Alright, so now let's move to insurance. We have insurance prepaid during the period. This is the opening balance of insurance, and this is closing balance. Insurance that is paid does not have that is the amount of insurance that is paid in advance by the company, and that is an asset. So unfortunately it doesn't have an opening balance, so it's just closing balance. What is the amount of insurance paid for by the company? The company paid 87,500 for insurance through bank. Alright, so through bank, we are supposed to write bank, but it doesn't matter. Cash bank, almost the same thing. Alright, it doesn't matter. Alright, so here we have bank. Amount paid in the bank for insurance is 87,500. Let me confirm that once again. 87,500. Alright, so but insurance prepaid is an asset. It does have a closing balance, although it doesn't have a opening balance. So the closing balance, we have a debit balance at the beginning of next period. So next period, how much is that? Insurance prepaid 4,250. So by next period, we can have balance carried on here, balance CD, yeah. So and that is 4,250. So this is the amount that will be charged to the income statement for insurance as an expenses. Alright, now furniture and fittings accounts and motor vehicles accounts. Let's prepare that too. It's very important to, especially all of this, that except from the inventory goods, normal inventory that will pass with the income statement itself. Alright, so the first thing we have now here is the furniture. So the opening balance of the furniture is an asset. Balance BD, that is an asset, and it is furniture and fitting 162,500. That is the amount there. Alright, so do we have any purchase during the period? No, we don't. Okay, is the equipment we have as purchase? We do not have. Alright, we do not have. So and the closing balance will be an opening balance at the beginning of next period. So we have balance BD here to be the closing balance. By next period, it's going to be an opening balance, and that is 154,375. Can you see? There has been a shortfall. So and here we have a balance carried down here. First we have brought down there, and it has been carried down. So that is 54375. So the shortfall is our happens as a result of depreciation. So this is depreciation during the period, and that will go to the income statement and then expenses. So I think it's well understood. Now motor vehicle as well, the opening balance there is absolutely 500,000. So the closing balance, which is going to be an opening balance for the next period, alright, is balance breakdown for next period is 450,000. Alright, so yeah, we're going to have balance CD now. Balance CD here. So that will be 450,000. So yeah, representing the amount that will go to the income statement now. Income statement. So that is the power of Excel. Alright, so we are done with this actual workings now. I think you can go through it. We have been able to analyze that easily. So preparing our income statement will be so easy. Now we have here in our payable and receivable, we have sales, credit sales, and as well credit purchase here. But if you take a look at here, we don't have we have sales, cash sales here, and card purchase here. So we need to sum them together. So we need to go and calculate our total sales. So our sales during the period, I'm coming, give me time. So our sales in the period, I have an analysis for that today. I've made the work easier for me already. I'm coming. And so sales, our sales here is 4,575,000. Yeah, and that is the sum of it is the sum of D48 and D61. So what is that D48 and D61? It's sum of D48 and D61. Alright, so so 48. So this is it here. So this is it here, the sales D48. So this is sales, cash sales, and also credit sales 461, credit sales. The sum give us that. Yeah, you can confirm it yourself. Now let me show you calculator. Yeah. Let me show you that. Let me show you that the sales, the credit sales is 3,537,500. So what is our cash? What is our listing? Our cash sales. Our cash sales is 1,037,500. So we have this 4,500,000, and we have that. Same thing applies to purchase too. These two are to calculated by summing your credit purchase, cash purchase, and credit purchase together. So these are credit purchase and credit purchase together. So I think that is well understood. So now we can prepare our income statements. So we can go ahead and prepare our income statements. So firstly, we have sales. We have sales, and our sales is 4. Let me check the calculator. So that is 4,575,000. So thank you, calculator. So I have that in my sales. Now next thing is for me to say less cost of sales, less cost of sales, and then I'll be turning what less cost of sales. Yeah, now cost of sales now is calculated with opening inventory first. Now we are dealing with inventory with goods, not consumable. Now opening inventory. So the opening inventory is 337,500. So we had our purchase. So I'm coming purchase. Let me do for the purchase. I'm coming. Give me time. Where is our purchase? Okay, this is our purchase there. So purchase has been calculated, and I saw that I've already summed the two together and gave me this. So let's have our closing inventory. We don't have carried in what we don't have anything of such. So closing inventory. So we have closing inventory. So don't mind the spelling. So the closing inventory for goods here, this it here, is absolutely 425,000. So this is my cost of sales here. This is my sales. Okay. The difference between my sales, the difference will give me gross profit. So this is my gross profit here. Gross profit. So sales minus cost of sales will give you your gross profit, or net sales minus cost of sales, or cost of goods sold will give you your gross profit. So we have that already. Now the list of all expenses. Let me write that out first. So what are the various expenses we have? The first one, we have rent. The second one is insurance. So the third is general expenses. We have general expenses. So we have wages and then salary. Just don't mind my spellings. Alright, so we have consumables, and that will come here. Consumables. Alright, so now depreciation. Let us not forget depreciation for the period. So the depreciation, we have depreciation for furniture and then fittings. Depreciation for furniture and fittings, and we also have depreciation for what is motor vehicle. So motor vehicle in Weibo. Okay, for motor vehicle. All right. So rent. So for rent, let's quickly check the amount of rent as calculated earlier. So the rent, the income statement for rent. So where is rent? This is rent here. This is the amount of rent that goes to income statement. Alright, so general expenses, insurance. Let's go to the insurance account. The amount that will come to the income statement for insurance. So where is our insurance account? Okay, this amount equals that. So general expenses has no salary, that is 350,000. It has no account. It doesn't have any additional information or opening balance. So wages and salary, that is one thing about wages and salary. It's of two types. We have this amount of wages paid to bank, which is 150,000, plus the amount paid through cash, and that is we are 26,250. So we need to sum that together. Okay. But let's do it this way. Wages is the direct expenses. Actually, wages is the direct expenses. It should be part of it should be purchase and wages. It's a direct expenses. Don't mind my manners since it's standalones. If it's not standalone, so we need to sum wages and purchases together. We need to sum wages and purchases together. So we need to sum wages together. So since wages it's standalone, let's take it as so plus what now? Plus this wages here, 26 250. This is 250. So let's put it that way. So although I should have separated everybody, there's nothing we can do. Error has occurred, so we need to just read it that way. Alright, so this opening inventory, this is purchase and wages. So this is our corrected gross profit now, with wages inclusive. So that is a direct expense since it's standing alone. Don't mind me, I should have next time opening inventory, purchases, add wages next. Alright, so now we have consumables. Let's go and check consumable accounts quickly. That's for that. So this is the amount that will come to income statement for consumables. Now depreciation of furniture and fittings. Let's go and check that. Furniture accounts. Furniture and fittings account. Okay, so this is the amount that will come as depreciation to that. Now we have motor vehicle. Do not mind the Excel. You chose the workings you should just be looking at and how we are to check it and put it there. Alright, so we have motor vehicle. This is the amount of depreciation for motor vehicle. So now we have this we have here is a sum of all of the depreciation. When sum everything together, so this will give us total sum of all expenses rather. So this will give us the total expenses during the period, and the difference between the gross profit and your total expenses will give you your net profit. So we have net profit or net income. Alright, so we have been able to calculate our net profit now. So thereafter we can let's move on to statement of financial position. Now we have our asset now, non-current assets. So we have furniture and fitting area. Furniture and fittings. What is the balance? Carry down. Closing balance of furniture and fittings after deduction of depreciation. Let's go back to the account. So okay, this is the closing balance here. This is the closing balance. Okay, 154. So we also have motor vehicle. So what is the closing balance of motor vehicle during the period? So I don't need to type since I have it earlier. So I'll just go to the account and take the closing balance. That is in NBV. So NBV is 450 as given to us. Now here we also have a non-current assets, which is equipment that were bought during the period. Do not forget, equipment were bought with cash from bank. So 375,000. That is the value. That is the cost, and it has not been depreciated at all. This is the total fixed asset. Now current asset, we have what are our current assets. So let's check. I think we have inventory. We have inventory. So we have two type of inventory. We have goods and we have consumable. We have consumables. So let's continue. So we have I think we need to go back to the full screen because of we don't need more details on the questions. So our inventory goods, closing inventory during the period. Let's take it from here. Closing inventory is 4 and we have consumable inventory, consumable accounts. can get that from consumable accounts. Okay, consumable accounts, closing balance. Well, before we continue, I think I noticed something that we are missing. We have an error somewhere on this receivable account. This is not the correct amount of cash received at the bank. This is the correct amount here. So we need to correct that, update that. So this is the real amount of sales, 3.5. We need to update that too. Yeah. Sales is so this is the real amount of sales now. Sales is 453 and not this. So we need to have that corrected. So this is our real amount of gross profit now. So that is the real amount of sales. Do not mind me. Alright, so we have consumable. So what are the other assets we have? We have trade receivable. So we can get that from the trade receivable accounts easily. So let's go to the trade receivable accounts. Closing balance. Is it here? So we have that. So we also have bank. Closing amount of bank. Closing balance of bank. So we have that's bank. Closing balance. Closing balance of bank. Alright, so we have cash. Period. The closing amount of cash in the period. So this is the amount of cash at hand. And as well, we have prepaid insurance. Prepaid insurance. So prepaid insurance. Let's quickly go to the insurance accounts to get the amount of prepaid insurance, the closing balance. Alright, so here we are. So we have that. So this is total amount of our current asset as in total of our assets. Now finance by capital. So we have let's go to our statement of affairs. That is to calculate to get our opening capital. We have that. So add net profit. To it. So we had net profit. So our net profit. So right to income statement. So this is our net profit here. So next thing is drawings during the period. Periods. I think we need the question now. Drawings made during the period. The drawings are okay, 37,000 plus what again? 37,000 plus 17,500. So we have that. So our liabilities now. The liabilities are trade payable. We have more than that. Payable, and then accrued rents. I remember accrued rents. So we can get this from trade payable accounts. The closing balance easily from that account. Trade payable is 400, and yeah, you can get it from rent accounts. Rents account easily. The closing balance is 30,000. So we have a total of 335 to 1425. Alright, so as you can see, so this our the financial position is balanced. So this statement of financial position, this is the income statement, and do not forget you begin from the workings right from statement of affairs and open all necessary journals accounts. So in each, this is our working 1. We have working 1, working 2, working 3, 4, 5. You can name that in your notes while solving. Alright, so I'll be sending some practice question on incomplete record to you through the group chat, or you can chat up on WhatsApp to get more questions as far as incomplete record exercise and the solutions. Alright, so see you next week.